If you get crude oil, you really get Bitcoin so quickly. It's unbelievable.
Why is that? What do you mean by that? I have some comparisons to oil and Bitcoin, but I'm curious what your comparisons are. How do you get oil, you get Bitcoin?
Let's say that you're a Russian oligarch and you own 1 billion acres of fossil fuel rich geology. Why would you pay a transportation company 3,000 miles to move a decatherm of energy when you could place a data center instead of building pipelines that get blown up? You place a data center right next to your natural gas facility, which is producing natural gas at about $1 or 20 cents. But by the time it gets to Germany, it's like been upgraded to $3 because of transport costs. Just like you or I getting on a train. Okay, we have a delay to get to where we're going, and we have to pay. You and I are not having to get on a train now. So we've arbitraged the train experience. I think Putin, if I was running his energy division, I can assure you they're all younger than me and you. These guys are going to look at, like, I can convert natural gas to a USB and then move that energy anywhere. One, I mean, if there was too little energy on the planet, they don't have to mine Bitcoin. They can just produce those decatherms into the marketplace, and the marketplace will pay you. However, what if in the case of an oversupplied situation, which I maintain we are always oversupplied. Last 30 years, we have been oversupplied with energy, and it always shows up because at $100, if you notice $100, it can't get past $100 and stay there. All the fracking that we discovered did not occur. That innovation did not occur at $100. It occurred at 10 to 30 because the scientists, the geologists, the drillers figured out, shit, we want to keep drilling. We got to figure out how to do it at 30, not at 70. And that's where innovation showed up. So I think you're going to see arbitrage, a natural thing for people to do, a Putin would do, would be to arbitrage the availability, the ability to produce or refine natural gas into another product called Bitcoin. It's no different than making a liquid gasoline, right? A distillate. Bitcoin will have its own market share. So why you wouldn't want to go for the highest margin yielding refined product? I think that's what markets do.
Well, that's the point right there, right? It's like the highest yielding product, right? That's the point. So it's like if I can get three or $4 an MCF selling the gas, but I could get $10 MCF putting it into Bitcoin, I'm going to put it into Bitcoin. And so then you see, potentially Russia taking a large amount of natural gas off, right? Plus, like you said, transportation costs, political risks, all those types of things. So then it's like, well, it's a higher economic return if I just put it into Bitcoin. I can put it on a USB drive, as you said, send it into the world over the internet. At some point, maybe this is what a market does. But at some point, maybe then because all that natural gas comes off the market, it pushes the price of gas up, and then maybe it starts to be a better return to go back to gas at some point. But I guess that's sort of how the market would play out. It'd be interesting to see. But I guess to your point, there's so much abundance in that natural gas that maybe they'll just want to continue putting into the Bitcoin.
Well, look, we just took a 1.7 million barrels of crude oil off the market after the pipelines blew up. Now, crude oil has nothing to do with those pipelines, but China's demand must be just have fallen off the cliff for one Saudi company to, I think it was Aramco, to remove 1 million, and then Putin said we're going to take 700 off, and now OPEC collectively is talking about another 1 million. Well, if you're taking all this supply off the market, where's the demand? Because the price is not going up. Furthermore, 20% of all fossil fuel, man, it's leaked all over the place. This is one of the most inefficient industries. It's 100-year-old pipes, okay? So there's leaking, there's inconsistencies, there's swaps that you lose. It's just a lot of friction. By no means is the energy market efficient. And like if I can... Let's say crude oil is at $50 and nat gas is at $2. If I sell into a $2 market, I have to print that cash, that income. But what if I can store that same amount of money, $1 billion of natural gas that I was going to sell in March, I actually go, hey, I'm going to roll it till September. How do I roll it? I don't have to go to storage companies and roll it. I can roll it into Bitcoin, right? And then I move my time, and I have very little cost. I only have the cost of capital to hold that in a vault that is not subject to being blown up. It's not subject to restraints or constraints by any U.S. government or any government for that matter for a piece of my energy. We're not talking about all the energy. We're talking about just a little marginal piece, maybe 3%, 5%, 10%. I maintain that the biggest, most successful miners in the world will be fossil fuel producers, sovereigns, and super major oil companies. They will be the most effective miners going forward, probably end up buying Marathon and Riot if they have to. And that's where that's where Bitcoin will be produced from those energy producers. Nuclear power stations, full-on nuclear power stations, will start selling 80% load factor. For the first time in their lives, they can actually be a storage facility and not have to sell base load. That's nuclear's biggest problem. They have to sell base load. There's no modulating like you would a gas plant, turning it on, turning it off, lowering the volume.